This is Charleston's retirement coach, Brandon Bowen.
And I'm Heather Branch here with Brandon, asking for his insight on the things you can be working on now to better prepare for your financial future and the goals you have for your retirement years. If you do not have a plan in place, you can find us at bowenwealth.com to get started on that conversation with Brandon. We also have links posted in the show notes, so you can just click there, or again, visit us anytime, bowenwealth.com. So here we are, getting into summertime, summer vacations. Are you doing, what kind of trips have you guys planned for the summer? The girls are, because here's the thing is that, is it Ava's senior year this year, senior high school?
Yep. Coming up. So we're heading into the senior year.
So you got to seize this summer, Dad. Listen, I'm not trying to pile on any kind of emotions today, but it's like, you know, isn't once they kind of go off to college, it's like this is her last like summer as like a kid, isn't it?
Yeah, I know. And if I were to ask her, she just wants to go into college. And I'm like, whoa. It's like, wait a minute, you're going to be a senior. This is, enjoy your senior year.
Yeah.
But yes, I've got something nice planned here in July when we get there. So we're doing a Mediterranean cruise.
Nice.
They've never been over that way up across the pond, so they're super excited. Yeah, so can't wait.
Fun.
Yeah.
The idea of summertime and vacationing and all of these things, obviously goals for all of us.
Do you know Ava's favorite movie? There's no reason you would know this, but my oldest is Mamma Mia.
Okay. Yeah.
So she just wants to go to Greece so bad. And I was like, okay, well, we were talking about it. She goes, no, actually, wait, I'm going to save that for my honeymoon. I was like, okay, I don't want to hear about that.
Wow. She has got her finger on the fast forward button though, Dad.
I know.
She just went from wanting to go to college to her honeymoon.
Yikes. Yes. But so anyway, she's a very romantic, she's seeing all that. She's got this idea. I know. So, yeah, just but great stuff, great memories. Can't wait to make them.
It's, I mean, and anybody that's listening to us looking for the retirement advice, they're just laughing and shaking their head listening to you. They're like, oh, young Brandon, the time will just fly, and before you know it, you're going to be Grandpa Brandon. Now, listen, I'm like getting on the Ava bandcamp. I know, right? My bad. Sorry. Taking it back, dialing it back. Yes. Let's focus on the listeners. Let's focus on the folks that you work with and helping them figure stuff out. Actually, here's the thing. I'm going to, what's the expression? Poke the bear here a little bit when it comes to what you do and your work efforts and the things you're trying to help folks with in the office. Let's talk taxes, shall we? I know, right? Sorry, not sorry, because here's the thing. Yeah. We have to talk taxes because something that we have been talking about over the past few years is the idea of this moment we're in as a country with current tax brackets where they are and how we must carpe diem the current opportunities.
Yes.
Because it's happening, everybody. The Biden administration is not even trying to veil it. They are putting it out there, proposing new taxes. And they're saying, listen, don't worry, middle America. We're just proposing it on the wealthiest Americans. And what you need to be caution about, we're telling you to seek caution, is that if you think you're going to be spared, think about this. TikTok contributor who goes by the name The Older Millennial had this to say about this whole idea.
The original income tax was the wealthiest 1% of Americans had to pay a 1% tax on their income. And of course, it passed easily. Everybody was in favor of it. Even most of the 1% didn't oppose it. But now the average American pays anywhere from 27 to 50% of their income in taxes. Guys, there has never been a tax that has been instituted by the government on the wealthiest 1% that has not grown to encompass everyone in America. Because that's the hard part for the government, passing a new tax. But once they get the American people to agree to that tax, well, then they have the authority to just raise it as time goes on.
And there we have it, ladies and gentlemen of Charleston. The idea of once they get that door to crack open a little bit, they just come and kick it wide open.
It was 1% to start with.
That's what I haven't. That's what he was saying. Wow. I mean, listen, the history of taxes in America. Yes. Man, you want to go down a wormhole. You can find yourself knee deep in information and how it all started and brought it to where we are now. The idea of, again, seizing the opportunity that we're currently in, making the case for an effective tax plan before, aka get to work now on opportunities, and during retirement. I mean, this is what we're talking about because historically speaking, do new tax rates tend to trickle down to lower income levels? You know, what are you seeing? What are you advising? how's this conversation going?
Yeah, it does. And so you can just see from that very subtle beginning of to where we are now.
Yeah.
Right.
Yeah.
And you have to, the problem is people don't factor in this, taxes in their retirement where, you might only be able to work with maybe 60 to 70% of what you've saved. Okay.
Got it.
And the people that this affects the most are those that have most of their life savings in tax deferred accounts.
And tell us what that is, a la a 401k.
401k, 403b.
Pre-tax IRA.
Yeah, all the letters.
Yep.
So if you've got that, and I don't blame you because you've been doing what you were told to do is save in your company's 401k, put money in there.
That's the thing.
Yes.
We're just doing what we're told to do.
Yeah, defer your taxes.
Yeah.
And now you get here to retirement and we've got this, where we know, in fact, I was just telling you about this. I was laying in bed this past week trying to calm down and go to sleep. And I'm watching the 10 o'clock news on Channel 4 here, ABC. And a piece comes on where they're showing clips of the Biden administration talking about how we have got to, they're not even trying to hide anymore. We've got to let these Trump era tax cuts go away. Right?
Jeez.
They were saying it. They were like, we've got to bring, the corporate rates back up and the taxes on, quote, the wealthy, right? We've got to start getting what we were getting on those people here. And then, and so let me give you a recap of the changes that are going to happen here unless, some law is changed.
Okay.
Right? Because when Trump made these tax cuts, the individuals were not permanent. Okay. Only through 2025 do we have our current deal in place. Okay.
Yeah.
Starting in 2026 is when things are going to go back to how they were. All right. So here's what I'm talking about is the first is, and this affects everyone, most everyone, I would say, is the standard deduction. Okay. The standard deduction, that's that first amount that everyone can just deduct. Okay. And so that was increased with the Trump era tax cuts. So of course that's going to decrease. Now, if no changes are made, 5 of the 7 tax brackets were lowered. Okay. And they were, you could make more money in that lowered percentage. All right. So if that's going to revert back, then that means 5 of the 7 are going to go higher. Okay. Another change that Trump put in there was doubling the allowed estate and gift limits. Okay. So that's a really nice piece. And then lastly was that corporate income. The corporate tax bracket was 35 and it went down to 21. Now you might think, oh, corporations, but they're wanting to be profitable for their shareholders and they pass that along a lot of times to employees when they want to attract the best talent. So I do believe in capitalism, right? So if corporate taxes are going to have to go back to 35%. Then that's going to be really, really tough. Okay.
Got it.
So again, this is this year and 2025. Okay. We have 2 years to make these timely moves.
Not even a year and a half.
No, that's true. Yeah. So this just implores the need for effective tax planning, just like you were asking, Heather, before and during retirement. You can't just retire and go, whew, okay, now, and just let chips fall where they may.
Yeah.
Right? You can't do that. So if rates are lower right now, why in the world would we not take advantage of that sale that we have going on? Okay.
Got it.
And what we want to do, what I do for my clients and can, talk to you about is what if we start converting some of your pre-tax money to never again taxed money? Okay. How does that sound?
Sounds pretty good.
I know. Yeah. So what we want to look at is what current bracket are you in retail? So let's say you've retired. Okay.
Yeah.
Let's say let me tell you about some clients. I've got some clients that came in from Somerville. Okay. 64 and 63 years old. And they had saved $1.5 million in their IRA.
Okay. Nice. Yeah.
Great. They
IRA,
did great.
Pre-tax IRA?
Yes. Okay. Pre-taxed IRA. Yeah. Good question. Because you could have the Roth IRA.
Right.
So, yes, in their pre-taxed IRA, they also had a pension and Social Security that totaled $100,000.
Well, that's nice. Good for them. Okay.
So they're retired and they've got that baseline of $100,000 coming in
for their income, for their tax bracket. So that's already putting them at a certain level. Okay.
They're already at $100,000. So that's great, but they're
already at that certain tax bracket.
They're already there. They're never going to be less because of that pension and Social Security. They're never going to be less than that number. Okay. So they're already in the 22% bracket.
Got it.
Now, when I showed him that. I said, okay, you see this? You've now gone into the 22. You're never going to be less than that. But do you see how much room is left in the 22% bracket? And I showed them current rates. That goes all the way up to just over $200,000.
Got it.
So there's almost $100,000 of room. Why do we not want to utilize that extra $100,000 and do a Roth conversion, pay 22% tax before these rates revert back to 25? Okay.
Got it.
The 22% bracket is going to go back to 25 here starting in 2026.
Okay.
And potentially it could go even higher in future years.
Right. Yeah.
I'm not sitting here saying it's going to stop at 25. It might, turn into a 30 at some point.
What's the national debt right now? $30-something trillion?
Yes. I mean,
who do you think is going to pay that off?
We just keep printing money and bailouts and all this stuff and this debt. Yes. I mean, we've got to start addressing that at some point.
Yep.
Okay.
Yep.
And so it's okay. Like a game of Red Rover, when do you want to bring this money over, pay the taxes? It's got to pass through their sticky fingers. Mm-hmm. And I'm saying right now, it's only a 22% tax. Okay.
Yep.
We get it over into your Roth IRA, and then that money is 100% tax free. All of your gains moving forward here is completely tax free. So these clients, they're 64, 63, hopefully they've got another 25, 30 years of life.
Sure.
Who knows?
Yeah.
And if we can, grow that money, that's all tax free, where they get to keep both sides, right? Their principal and the growth. They don't have to pay any tax on that stuff.
Yep.
Okay. So you listening here, you might be sitting there going like, man, I wonder if I'm walking past these same opportunities here that we only have a year and a half left, right? So what I want to do is I want to sit down and review your specific situation, and we can discuss possible ways that you could take advantage of these current opportunities.
Yeah.
And I would say while they're still available.
Yep.
Okay. Yep. So if this sounds like you and you know that you need a second opinion on your retirement tax plan and income review, head on over to bowenwealth.com and click on the contact tab so we can begin working with you right now.
Thanks for listening to Charleston's Retirement Coach Podcast with Brandon Bowen. To learn more, visit bowenwealth.com and join Brandon for his radio show, Charleston's Retirement Coach, Saturdays at 11 a.m. on 94.3 WSC.
Financial professionals are not licensed in all 50 states. To find out if J. Brandon Bowen is licensed in your state, please call 843-203-2030. J. Brandon Bowen is an investment advisor representative of Bowen Wealth, LLC, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. J. Brandon Bowen is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Bowen Wealth, LLC, insurance licensed in South Carolina. Market Guard is a registered investment advisor with the SEC and provides model portfolios only to Impact Partnership Wealth. Market Guard makes no implied warranties or representations and is not liable for any data presented.